I'm Sarah Fennick. Welcome to In the Money, Bank to Binary's weekly discussion program, where we take a closer look at the big economic events that impact the financial markets. This week, we're going to focus on inflation and the reasons why consumer prices rise and fall, and more importantly, look at how binary options investors can use price data to place in the money binary options trades on currency pairs. I'll be putting these questions to Lauren Carmouche, Senior Investment Analyst at Bank to Binary. Lauren, many investors fail to realize the importance of price data. Can you give us an overview using a real-world example?
Yeah, price data is really important, especially if you're a currencies trader. The reason being is that many central banks or monetary policymakers use price data or inflation data as a way of measuring whether they should apply higher or lower interest rates. They use higher interest rates to dampen down the economy or lower interest rates to stimulate the economy. Now, if inflation is heading higher, like it did do recently in the Canadian economy, generally we would expect to see an increase in interest rates to dampen things down. Instead, the Bank of Canada decided to stay with the 1% main interest rate, which they have done since September 2010. And the main reason being is they thought that price increases were something that were temporary. Generally, they decided to take quite a dovish tone and decided to keep that main interest rates in order to protect exports. They don't want the Canadian dollar rising too high, especially against its major peers, because it makes them less competitive, and they rely quite heavily on their exports in order to drive economic growth within Canada itself.
So from this move, can we assume that the Bank of Canada's prime focus right now is on generating momentum for the Canadian economy?
Absolutely. Like I just mentioned, exports have been a little bit of a difficult area, especially and quite surprisingly recently. Many economists were expecting the Canadian economy to show trade surplus last month, but in fact it was a deficit of 683 million. And the reason for that was low exports. And it was as a result of high energy prices. Domestic prices were very high, which made them less competitive on a global scale, and that negatively impacted their economy and their competitiveness within the global economy.
With the recent acceleration in prices, is the outlook positive for Canada in 2014 and beyond?
I think it absolutely is. The reason being is Canada is a very mineral-rich or resource-rich country, and there's been high global demand for the energy that's being produced in Canada. One example being the oil that's being produced from hydraulic fracking. Also, we're seeing a bit of momentum gathering in the US economy, which is only going to have a positive impact on the Canadian economy, as 77% of exports from Canada actually go to the US. So it's a major trading partner. So if they're doing well, Canada's doing well. We're also going to see a little bit more demand with confidence growing and demand growing from the US. We'll start to see that trickle through to the Canadian economy, but we'll start to see a little bit more demand in terms of consumer spending. That will have a positive impact on the services sector, and also a positive impact on the real estate sector, which has been struggling likewise it has been in the US. So the knock-on effect of positive impacts in the US economy are going to have a similar impact in the Canadian economy.
Thank you, Lauren. I'm Sarah Fennick. This has been In the Money with Lauren Carmouche, Senior Investment Analyst at Bank to Binary. As always, be sure to check your inbox for our weekly market analysis emails. They're unmissable. He is wishing you all a very successful week on the markets. Until next week, goodbye.